Ever ponder when is the ideal moment to purchase Tesla stock? Should you purchase before, during, or after a split if there is word of one? To find out the solution to that, be sure to keep watching and paying attention. Tesla is advocating for a stock split following Amazon. Despite the fact that it hasn't been approved yet, it made investors question if they should purchase Tesla shares. Given that many individuals view Tesla stock as a solid retirement option, the stock is currently very popular. See why it's still not too late to purchase Tesla shares in today's video. Recall that Tesla announced a proposed stock split in March, which may occur later this year. Although the EV firm hasn't disclosed specifics of a stock split yet, shareholders will probably have to vote to approve the split in the end. Elon Musk has been the CEO of Tesla since 2008, and the company started trading on the Nasdaq Stock Exchange in June 2010. Over the years, Musk's aspirations for Tesla, his investments outside of his work at Tesla, and his tweets that have an impact on the stock market have made him a contentious figure. In April 2024, Tesla's share price was approximately $875, but it is currently back in the $700 region. A year ago, in 2021, the price of a single share was approximately $700. Therefore, your investment in Tesla would be worth around $1,250 today if you had invested $1,000, or slightly more than one share, a year ago. However, if you had invested $1,000 in Tesla stock at the outset, what would it be worth today? On June 29, 2010, the firm went public with a share price of $17. That would be a 5.16 after accounting for the stock splits the corporation has had throughout the years. On the day of Tesla's initial public offering, IPO, $1,000 worth of shares would have been purchased. Today, those shares would be valued at over $169,000. A shareholder retains the same amount of investment in the company but gains extra shares in their portfolio when a corporation divides its outstanding shares owned by shareholders. For example, if you had $1,000 in Tesla shares prior to the split, you will still have $1,000 in stock following the split. But the quantity of shares will vary. If historical data provides any guide, a 5-for-1 split would leave you with $1,000, but give you 5 shares instead of the one you had before to the split. Why then did Tesla choose to divide its stock? The price of a single share could be one factor if the investor's total investments are the same. On the day the split was announced, March 28, one share of Tesla closed at $1,065.10. That kind of premium for a single share might be too much for the typical investor. Therefore, dividing the stock could attract more new investors and make it more inexpensive. To aid with liquidity, a stock split may also be justified. Tesla might increase the number of shares it issues without needing to adjust the company's valuation. By issuing more shares, a firm may also be able to enhance its liquidity, that is, its capacity to turn its stock into cash. An announcement of a stock split may also raise share prices. In the instance of Tesla, the company's stock price did increase in the first few days following the news. If a business believes that the price of its shares has risen too high for the typical investor to purchase, it may still choose to split its shares. Existing investors will own more shares at a reduced price per share as a result of the stock split. 2-for-1 stock splits are typical. Each shareholder receives 2 shares for every share they presently own, with the value of each new share being half that of the old ones. Keep in mind that each investor's position value remains constant. Tesla intends to divide its shares 3 ways, but the initial reports in April that CEO Musk was attempting to acquire Twitter might have tempered investor enthusiasm. According to reports, his $44 billion bid for Twitter might require him to take out a loan totaling $12.5 billion in Tesla shares in order to complete the deal. The crucial query now is it better to purchase the shares before or after the split? Naturally, it's hard to predict what will happen to Tesla shares right before or right after the split, but it's safe to argue that much of the split's impact has been factored into the current trading price since it was disclosed. Put another way, astute investors are basing their acquisitions and disposals of Tesla shares on the split. it might be a smart idea to purchase before or during the split, as some analysts believe that the price of Tesla shares would surge after the split. For the company's shares, some quite high price projections have been made. Naturally, this does not imply that the forecasts are correct, particularly given that it is now trading at about $700, with values close to $1,000. However, there's a chance that things will improve a little bit following the split, which could lead to a high stock price. Would you purchase Tesla shares prior to, during, or following the split? Post your ideas in the space provided for comments below. The price to earnings P/E ratio can be used by investors to determine the stock's value because Tesla started to produce a profit in 2020. When it initially started to earn a profit, its P/E ratio was high. Now that earnings per share (EPS) is increasing swiftly, the stock's valuation is declining. The P/E ratio of 89 is the lowest it has ever been. Compared to established automakers like Ford and General Motors, which are trading at a P/E of 4 and 5, respectively, Tesla continues to fetch a premium. But Tesla's profit margin is expanding. Over the next 3 to 5 years, analysts anticipate a 30% annual rise in EPS, which is far higher than the just 3% growth for Ford and the 10% growth for General Motors. Though the exact amount of that premium is debatable, it appears that Tesla merits the higher valuation it currently holds. However, if the business can expand as experts predict, long-term investors may eventually see the stock rise to reflect its valuation. The majority of analysts believe that Tesla has a bright future ahead of it. It is unlikely to see the kind of growth the company has seen over the last 2 to 3 years, even if its growth trajectory does not change in an upward direction. Most businesses, especially those in the technology industry, fit this description. They grow quickly initially, but as more competitors enter the market, their growth slows down. However, slower growth is still growth, and analysts generally concur that Tesla is still in a strong position to develop in the long run, but there may be some hiccups along the road for investors. Tesla's growth has undoubtedly been strong if the company's past is any guide, but it hasn't been immune to the recent market decline. Additionally, the price is now significantly more volatile than usual due to the back and forth between Elon Musk and Twitter. Nevertheless, it seems like Tesla, the manufacturer of electric cars, is here to stay, and it has led the way in developing the technologies needed to make electric cars practical. Although a stock split may make news, Tesla's growth and profitability should entice investors to purchase the company's stock. Short-term price declines are possible, and it's impossible to predict when a bottom will appear. Your best chance of letting a company's fundamentals determine your investment returns is to approach your investments with a broad time horizon. A good business usually does well in the long run. Another option is to gradually purchase shares by mixing your cost into the average, which should not be too high or too low, by using the dollar cost averaging approach. Make sure Tesla would make a solid investment in your portfolio before you purchase stock in the company. Should you want to proceed, research some of the top brokerage accounts that will enable you to handle your investments with the utmost efficiency. You should be aware that there are alternative ways to invest in renewable energy if your motivation for buying a Tesla is your belief in electric power. Additionally, keep in mind that investing in the stock market entails risk, and that stock prices might fluctuate based on a number of market conditions. Having said that, it is crucial that you carefully research the stock and keep an eye on how the stock market is moving. Experts advised should also be taken into account, as they have done extensive research before expressing an opinion regarding a stock. For additional content on Tesla stocks, subscribe to our channel and view our other videos.